Hey, good morning, everybody. It is bright and early Thursday morning, about 90 minutes away from the market open. And did you survive Liberation Day? Did your 401k survive Liberation Day? Quite an interesting play. Before we jump into GameStop, I want to pull up the chart here. Not on GameStop. Let's pull up we're going to look at SPY, and I want to look at the activity yesterday right after the close. What seemed like a decent day yesterday, especially for Tesla. I'm not sure if you caught that alert that I posted yesterday with those Tesla calls, and they were short dated. So I think most seasoned traders took their gains and happily left. Short dated situation. You never know what was looming, especially in regards to the tariff news. So yesterday, with the S&P. So we had a decent day. I know everybody was like, eh, and then boom, we had a decent rally. We got up to what, 567.42. Then we had the closing bell. We're kind of in that limbo as we're awaiting President Trump's tariff comments presentation. So you can see here the S&P there shortly after the close popped all the way up to 570. I remember I saw it. I was just looked briefly, saw, 570. Wow, we're really doing this. It just didn't make sense. I got busy, came back to the chart later and was like, oh wow, okay, so this is what we're doing. Now I had posted or replied to Laid Back yesterday. We were noting the high net gamma put level at 550. He had posted a chart from Unusual Whales showing the GEX level with a high net gamma on that 550 side. And then SPY last night dropped down to 542.20. It's currently at 546.85 ahead of the market open, and ahead of the options market being open as well. So we'll really have to wait and see how this plays out at the open with this type of a drawdown this morning across the markets. We want to see how that plays out, like I said, when the options are available to trade. Sure, the pre-market activity, after hours, overnight sessions, one thing. But once the option dealers and market makers and those with positions reposition based on the price action, I'm not sure exactly what we'll see, but we'll take a look at that. But it was just something when I saw that, I'm like, wow, And it was a similar concept yesterday with Tesla, because I'd shared those calls yesterday morning where I noted the traders were loading, they had been loading the 260, 265s, and the 270 calls. And they were loading them, and I posted right around, I think this time, right around as we were breaking out a little bit on a short dated, like a EMA cross. So what we got here is a 9 EMA crossing the 21, and then just kind of a move above. That right there with some volume then continued that confirmation as Tesla moved up to like 284, 285. Yeah, 284.99 before the close. Then it did see 292 shortly after the close, kind of how SPY did, right? It was kind of that limbo right before the tariff talk, and then fell to a low of 260 yesterday in after hours, yesterday evening. So we had posted the calls right around here. We gave you an incredible short dated opportunity. Let's actually go back and see what those did yesterday. I had shared them earlier in the day. Yeah, the 260 calls had from 1293 to 2300, not bad. The 265s ran from 1080 to 1930, and the 270s from 832 to 1572. I had posted it there for everybody on X to see at 1022, so less than 2 hours after the open. Let's see, at 10:22 a.m. That was roughly right around here, the breakout, and then boom, pushed higher. So not too bad in that regard, because I'd noted the large increase in net call premium the past 2 days. So this would have been yesterday morning, April 2nd, and then April 1st. So extremely large, but by the morning it was already 33 million on that net call premium. And like I said, I had posted and here's the screenshots for the prices. 1293 on the 260, 1080 on the 265, and 832 on the 270, just like I quoted from the post. I mean, those boomed. That was a quick, short dated, incredibly lucrative opportunity. So hopefully you caught that one. I know it happened very quickly. So especially on something short dated, be prepared. So, and we had talked about this yesterday as well. And I think everybody kind of has the gist, managing your risk. You see a gain like that, you got to take it. Otherwise, it'll get faded, especially with a short dated. I mean, tomorrow those calls expire. So yeah, exactly. Let's do a little update here this morning for Trend Spider. But let's jump over to GameStop because a lot of stocks were impacted with the tariff talk. What did they do? Let's take a look at GameStop here this morning and even last night. See the similar, everything kind of did the same. Shortly after the close, popped up to what, 22.88, and then tariff talk, and by then it was down. I saw a low of what, 21.18 was the low last night in the extended hours. Yeah, 21.18. Yes, I did switch to black chart today just for the video. We'll see if anybody notices. Currently trading at 21.60. So let's take a look here and pull up that daily. Take a look at that daily chart. We'll zoom it in a little bit. Now that we're kind of getting past notes, bonds, and arbitrage, the volume is kind of slowed down here. So we can see what happens. So we turn on the extended hours so we can see where we're actually at. 21.60 at the time of filming. Let's see, a 20.73 low. 21.18 low on the 2nd yesterday. Okay. That's with the extended hour data. And then on the 31st, the low 20.73. So definitely some areas to watch. We'll have to see what exactly is going to happen there. But let's take a look at some of that option flow here from yesterday on GameStop. And yes, some of the insiders did sell their shares on GameStop. But if you go to the SEC filings, they received stock awards on April 2nd. So the shares they actually sold was just a small portion of that award. They sell those to cover the tax. So basically, when you receive a stock award from your company, you would essentially incur a tax on those shares. So typically what you would do in that scenario is you'll sell the amount of shares just necessary to cover the tax portion of receiving that stock award. It's very common. So that's why you saw, if you did see, 2 insiders selling shares. So that's just what happened. But yesterday we had total premium of 22 million. Net premium was down though, just negative $250,000, propelled by just net call premium down and net put premium actually down. So nothing too crazy in that regard. Because if you look like historically, 22, is still decent, a lot better than the 8 and 4 and 9 mil, but not a lot of activity in that regard. Volatility is at 74%, so it's calmed down a little bit since the higher 95, which was, following earnings there. And then the bonds, or pardon me, the notes, so now IV at 74%. So let's take a look here yesterday. On Wednesday, what actually was transacted. We'll take a look at that highest volume contracts here, just so we can get a quick gist here what was being actually traded. A lot of short dated for this week. 25s, 23, 24, $25 calls next week, 30s this week, 45s this week. That's really out of the money there. 23.50s this week, 22.50 puts. So here's your volume here. Here's your columns sorted. So you can take a look at your strikes. If you need to pause right here, take a screenshot so you have that for your data. You're more than welcome to do that. And then over here on the right, you're welcome to do the same. The highest open interest contracts. A lot of that 125 calls for June. And we've talked about that before. If you didn't think that GameStop was going to close over $125 by June 20th, you could safely sell a covered call and receive $25 in premium. Now, if GameStop did then close at 125 or higher on June 20th, your shares would more than likely be assigned and be sold at $125 each, which probably wouldn't concern you either. So if you look at, like, for example, we'll just look at this, the $125 calls since June, they've built, So this was, let's see, November 24. Those were like $3.50, and they had fallen down all the way to what, 50 cents or $50. $80, and then back down now to 25. So anybody selling calls this whole time on this particular strike has certainly captured some gains, and you can tell the ask volume over the last 90 days 86,000, but a lot of sellers as well, a lot of bid volume there. So a mix, like I always talk about, of buyers and sellers. So there's some of your highest open interest in that regard. Those $5 puts, we talked about those. But yeah, let's drill more into yesterday, though. 23s, based on current price, those are out of the money and expire tomorrow. So that's a not an ideal scenario, especially with the IV now spiked 120% this morning. About 400,000 in premium yesterday. Again, mix between buyers and sellers, and open interest didn't change. In fact, actually decreased this morning on the 23s for this week. Let's take a look at the 25s, though. I mean, you can look at these if we want to. The 25s, these are let's see, 16% out of the money. Again, split between bid and ask, so buyer and seller, plus day trader if there were. So if you sold, for example, maybe you sold some covered calls yesterday at 20, and then you bought them back at $8. That's a decent move there. About 127,000 premium, not a lot, but the IV has now spiked, so a lot of that premium, whoop whoop, bye bye. Especially short dated. You know how it goes. Out of the money calls, short dated, high IV. It's a recipe to lose money if you're not careful. Manage your risk. Get closer. Buy. That's why I personally, I'm always in the money with time. That's just what I buy. That's the value I see in that regard. Sometimes out of the money can play out, and is cheaper entry. And sometimes it doesn't play out. I feel like in the money for me works, but also just know, the closer you are at the money, in the money, those contracts can move very quickly. So, a lot of people, when you're like out of the money, they don't move. In the money, boom, if the stock drops $1, that's going to change very quickly or go up $1. So it comes down to managing your risk, managing your capital, proper allocation, proper sizing, just proper investing, not YOLOing the full port. So $45 calls for this week as well. We've seen that volume, I think, the last few days here, but nothing too significant. Bid, they're selling some of them and they're buying some, but the value is like $1 a piece. So these are more than likely 109%, unless you think GameStop's going to $45 or higher tomorrow. That's why they were selling those. Some of those got filled yesterday at $5 each. Somebody took a safe bet and said, "Hey, I don't think GameStop will close." That's 110% away, 109% out of the money on that. So yeah, therefore they might have sold those to just collect some premium on their existing stock. The very common. I talk about this often. Let's see, the 23.5 for this week. Same scenario. It's bid and ask almost identical. Volume yesterday, but the DOI has changed the last 2 days, has decreased. And then the implied volatility has gone up. So as for the money spent yesterday on GameStop, we'll look at that. We'll sort those just by premium, the top, like where was the money spent. I like to see the bulk of the money. Where were they dropping the money at? Let's take a look at it here. As we noted, remember we talked yesterday about the $75 puts, the $6 million in premium. If you didn't, go back and watch Wednesday's video. We talked about that. Looks like $10 calls appearing there. 5 mil. Let's take a look at that. So this was $10 calls for January 16th. Yesterday, what did we do? See, bid 1,900, ask 1,500. OI did decrease. Okay. More than likely could have been sold and then changed. Because, see, these look like they've been being sold the last few days there. OI did increase, but that was a sell. I'm just looking at the larger, more bid volume or filled towards the bid. And then the premium yesterday, 4.9. OI decreased by 1,700. So let's zoom this out a few days so we can take a look kind of what might have been transpiring. This gives us a better idea what's happened here. Selling, bought back to close, didn't work out. Exercise, I don't know why you would. With an in-the-money call with so much time, it's got intrinsic value, so you wouldn't necessarily lose that. If you sold $10 calls, they're in the money. You receive $13.63 up front, plus the $10 strikes, $23.63. So a little bit higher than your current share price. So that could have been the strategy in that regard. So for example, if I sold, say for example, I sold a $10 call yesterday, I received $13.76 in premium, so $1,376 or $13.76. And then if you add the 10, which is the strike, $10 and 13.76, 23.76 higher than the current price of GameStop. So in that regard, say for example, if I wanted to get out of my shares, if these were even called, only because there's intrinsic value on this contract. So yes, they're in the money. Not sure if you'd be assigned ahead of expiry, but you could be. But you're essentially at this point, if you sold, you're basically what you're saying is there. I'm selling my shares if it got assigned at 23.76, a little bit higher than the current 21.57 current share price. That's kind of how that works. So we'll take a look at that. We'll follow that. We'll see if any activity shows up today in that regard. Because see, when around the time, let's see, the 26th. All right, let's look at this here. We're going to back this up a few days, just to give you a better picture here. It was around the time of the note offering and earnings. Let's see, we see volume there, 532, but OI decreased. Then we see that large day on the 27th, mostly filled towards the bid. Let's see on the 27th here. 1269, 1263, and then yesterday, 1363. I mean, sold, bought back, bought, sold. It's interesting just because it's in the money, but it's big money. Repositioning there in that regard. But while the stock, this could be also another way to look at this. So you want to switch your bias, for example. Let's say you felt maybe where GameStop was at was the bottom. Okay, hypothetically. Let's say that's what you thought. So you want to buy these $10 calls to give you that right to buy shares at $10 in January, regardless of the current share price. So, for example, let's say you were bullish on GameStop. You thought it would go to 25 or 30. These will increase in value. Obviously, they would have intrinsic value because they're already in the money. So the higher these move out of in the money, the more they're worth. So, example, if GameStop was 25, this would be $1,500 a contract. So if GameStop went to 30, that would be roughly $2,000 a contract. So if that was your thought, that gives you an opportunity long term to buy shares at $10. So there's two ways to look at that scenario. Just remember, there's always multiple ways with contracts. Bought to open, you can sell to open. So you got to always remember that. And then those $75 puts, we talked about that on Wednesday, or pardon me, on Tuesday. So make sure you check that out from Wednesday's video, because we did see additional premium there, and we've seen that, and it's all been at the mid here, more than likely relating to the arbitrage of the notes. The only reason I say that is these are deep in the money puts. So if I sold a $75 put, not necessarily, you're like, hey, I'm in the money. If you bought a $75 put, gives you the right to sell shares at $75. Buying a $75 put, or pardon me, selling then the $75 put, you have the right, or essentially obligation of buying at $75 a share. But these were all filled, like no side. So more than likely arbitrage. I mean, I know the OI did increase. I know there's some premium here. But if you look, let's see, 52.73 was the price on those. And then if you add the current share price, 21.57, that's around your $75 strike. We talked about that in the other video. Somebody's like, hey, what's the math? Just a quick way to do it. Look at the contract price, especially on something on this particular scenario that's in the money. It's 52.73 is the contract, so 5,273. But if you just look at the dollar, 52.73 plus 21.57, this was the share price now. So this contract price is a little bit not what it should be. This was based on yesterday's price, but I'm just trying to give you the idea that when you add up the price of the contract and the current share price, will give you that strike price. So there's nothing ever for free, and the math always checks out. I know some people, when they first realize, oh, wait a minute, that's how that works. So, like if you have a $10 call and GameStop's $21, that's essentially going to be worth $1,100 because it's $11 in the money. And each contract represents 100 shares. So that $1 times 100. So that's how you look at that in that regard. And then the rest of the premium was just things we looked at already. Let's see, $22 calls for June yesterday. There was some mid-fill on that. which always just, it was filled between the bid and the ask. So on unusual whales, it'll just be denoted at the mid because the price was not closer to the bid or closer to the ask in that regard. So OI, let's see, 1600 volume yesterday, a little jump in open interest today on the 22s, which are just slightly out of the money. And then these $15 calls, similar scenario for January, $15 calls. So, for example, let's say you sold the $15 call and you're like, why would I do that? They're in the money. If you did, you received, let's see, what were they paying? 1040 a contract. So you got 1040 a contract plus your shares sold at 15 gives you an out price of around $25. So that's why you could do that. If you wanted to leave your position, you sell a deep in the money call, hope to be assigned, and hope that the premium received and the strike price covers your cost basis. So, for example, let's say you're in GameStop at $24 or $25, you're trying to get out. You sell a $15 call, you receive $10 in premium, which is essentially $1,040, and then you would receive $15, each for each of your shares. If you add that up, it's about $25. So, with the expiry not till January, these carry an intrinsic value, so it may not get assigned. You never know in that regard, but it could happen. So there's always multiple ways to look at it. That's what's interesting about it. So, when you follow the flow, it's not. A lot of people post. I see it all the time on X. They post, 100,000. They don't even know what they're talking about. They just happen to have an unusual whales subscription. So they post more or less for likes, I feel like, and engagement, but not actually real information. I mean, it is real in that it's real data, but most of the time they don't really know what they're talking about. So you be careful out there on the internet. So I try to give you, both sides of it. I try to give you the idea and then give you the data to support it. So I'll let you take a screenshot here. You can take a look at everything. This, like I said, sorted. Here's the premium column. Here's your strikes. Here's your expiry. Allow you to take a look at that. So you can see your volume here yesterday compared to open interest. So let's see, 25s for May. Let's see, 315,000. See, unless it's really over 600,000, I really just don't look. I know it seems silly, but in the grand scheme of things, remember last summer when GameStop was seeing hundreds of millions of option premium, we had to kind of look, for them larger orders. So, these are the things that stuck out today in that regard. So let's go back over here. We'll take a look at one more thing. So I wanted to look at how the gamma has shifted on GameStop now that the price has moved down a little bit. And now that the notes have closed, I wanted to take a look here. We've talked about this before. Let me zoom this out a little bit. So look at this spot gamma here. And I knew that the highest open interest was starting to get away from where we're currently trading at. Yeah, our highest open interest there, 22, 23, and then 25. Look at that exposure here. Net game exposure, about 9 million per 1% price change. So perfect time to screenshot this here for you for spot gamma exposure. It's just the assumed the money, the dollar value of gamma exposure that market makers need to hedge per 1% change in the underlying stock price. Positive values long gamma, negative values short gamma. So to manage those positions, so essentially every change, 1% price and change, about 9 million in gamma. So it's basically what we've seen this, and I've talked about it before, as GameStop moves up in price closer to where all of this open interest is at, that's the gamma ramping up. So if you get closer, that makes more of those calls that are out of the money go in the money, and that's how that kind of snowball effect takes shape in that regard. Let me zoom back up here for a second. Oh, goodness gracious. I'm too much zoomed. I got too much zoom right now. I need to talk to Unusual Whales and get that periscope added there, but that's for another video. So daily gamma, CallGex, okay, positive in that regard. Let's take a look here. Gamma exposure, highest net gamma, it was around the 25 on the call side there. Call gamma, 20. Well, that put gamma there strong at 20 and 22 as well. And then net gamma above anything over, 23, 24, and then to 25. It's kind of snowball in that regard to 30. I'm not saying that's where the price goes. I'm just saying where the gamma. Highest net gamma position around the June expiry, April 17th. And then this week, it's, big mix there. You see it week in and week out. I've talked about this in many other videos. Usually the highest is the current week, and then a couple weeks, sometimes the monthly expiry. In this case, your strongest put gamma, call gamma, net gamma. That's a different one for this week. So, and then we'll take a look here. See that delta here with price. Delta exposure, like I said, net delta, so at 20, and then boom, 25 and 30. Like the stock moves up, it gets a little more exciting as these puts then go out of the money and the calls go in the money. So definitely something to take a look at. You can look at delta exposure. Assume delta exposure market makers are exposed to. DEX assumes market makers are part of every transaction, and that the bulk of the transactions are buying calls and selling puts to investors hedging their portfolios. So if a market maker has one contract open with a delta value of 0.05, then that market maker is exposed to 0.05 times 100 shares of delta. I don't know if you've seen that before, but total market maker exposure is calculated by summing up the exposure values of all open contracts determined by that daily open interest. So when you hear delta, so like I said, the value is 0.05, so it's 100 shares, per one contract. So that would be the exposure in that regard. So if you want to screenshot this or just sign up for Unusual Whales, you can do that as well. And I've talked about this on many other videos with GameStop where I've broke down, delta, gamma, charm, Vanna, and things like that. So you're welcome to go back and take a look at some of those. Let's take a look here at the OI changes. Open interest per strike. 25. Call side 5,300, 2,450. 24. A little bit of changes there. 23 plus 1,700. It's still kind of light in that regard. You saw the. We looked at the open interest already in that regard. So, yeah. That's what I got in that regard today. As for price and the action, we'll see what happens. The market's set to open here in about an hour, so it gives you an opportunity to watch this. GameStop 2154. Let's take a look at a couple other names here real quick before we wrap up. Just shorten my time frame here and turn on extended hour data. 544. Wow. Well, let's look at that for a second on SPY. Let's go back to our daily. Let's turn off extended hour. Let's look at some levels here. Let's see. Clean this up a little bit for you. 564, the 9 EMA. What's the 50 day? 586, the 200 day 574. My goodness. And down there, 545. This is using extended hour data. So I think the last time actually SPY was 540, I believe it was September. Yeah. Oh, wow. Just wiped out the pre-election gains. Was that September? Yeah. 552 on September 12th. Low 539.96, September 11th. Yeah, kind of right. Wow. Just wipe that all out. Here we are. Wipe it out. No, not really, but it's kind of what it feels like, doesn't it? So we look at that here. Let's get a percentage here. We'll go off the low there, 539, or just roughly, to that peak in February. 612.76, so at 13%, $72 from there, gone. Not gone per se, but you know how it goes. Markets move in cycles. They move on headlines. They move on news. They move on selling. Wow, wow. That's just wild, you know? That's just wild. Let's take a look at Tesla real quick here, too. Yeah, the OGs know. We've been trading Tesla for a minute. We know all the level, not the levels, but this is from the Robotaxi gap down. That was one. And where are we at this morning? 265. See the close yesterday at 282.76, 265. Okay, a little better than the 260 it was yesterday. Let's take a look, see how this all plays out here. Volume yesterday was impressive. What Tesla volume yesterday? 128 mil. Pretty big volume day. Let me turn off that extended hour just to clean that chart up a little bit. It looked better than it 292. I know. But I do appreciate everybody tuning in. If you watched the video all the way through, I know I take a lot of your time. I'm going to continue doing it. You're awesome. Why don't you just reply down below, Liberation Day, and I'll know you watched today's video all the way through. Long-winded as usual. I know a lot of people talk about, hey, you want it on YouTube. I've got YouTube, old YouTube channels. In fact, all of these videos are sitting on one of those YouTube channels now, just as unlisted. I haven't decided if I want to draw attention to that. I know a lot of people know about it already and have seen it. It's a lot of older videos, with my son. So it's just a part of my life back in the day, and yeah, we were on the internet. So, but yeah, leave me the reply down below. Liberation Day. I'll know you watch it all the way through, and good luck out there. And happy trading. Happy Thursday. We got Nintendo Switch 2 pre-order news yesterday from GameStop. So the pre-order for that's April 9th, which is exciting. It's my birthday next week, so kind of my pre-order birthday gift to myself, and then patiently wait for June and Mario Kart World. So, yeah, that's what I got. Y'all have a fabulous day, and I'll talk to you real soon.